All right, to our first conversation now. We see telecom operators in Nigeria asking their regulator, the NCC, to implement cost-reflective tariffs. We also see FX losses in the listed telecom companies on the NGX, the likes of MTN Nigeria and Airtel, and that's impacted profitability of these companies. Let's discuss further now with Mr. Bismarck Rewane, CEO of Financial Derivatives Company, joining me right here in the studio. Great to have you. Good morning.
Thank you. You said May should be a good month for the stock market.
Yeah.
What they say, sell in May and go away.
Right.
So May is always a bad month. So don't expect.
So historically, it's a bad month.
What it
so
is.
Let's not expect the bull.
Sell in May and go away.
But we've seen a lot of changes in these markets these days. But who knows?
Who knows?
Who knows if May is going to change? All right. But looking at these listed companies now, it's like FX losses. That's become a thing. Right now from 2023. Even to the first quarter of 2024. So we're already seeing that already impacting the likes of MTN Nigeria. So talk to me. It seems this is a major pain.
It is a problem
for these companies.
Like what we say when the slides come up says from hero to zero.
Right.
This sector, quoted and unquoted, has provided a lot of income for people, for individuals, for households, for collective investor schemes, for everybody, for taxes for the government. So all of a sudden, that MTN had their EGM and the AGM and no dividend. In 2022, 454 billion naira dividend paid to shareholders. This year, zero. Now, so what's the impact of this? This sector is in decline. And the decline of this sector is leading to the decay of the economy. And in these fragile times, we have to be very careful because anything can happen. So the question is, what do we do about it? And what I want you to understand is that 11 years ago was when they had a price review. 11 years ago, who was the president of Nigeria? Goodluck Jonathan. 11 years ago, what was the fare from Oronchoke to Balende? It was 50 naira. Today it's 300 naira. 11 years ago, what was the price of a bag of cement? Less than 2,000 naira. Today, that's anything from 27, 10, 15,000 naira. What was the exchange rate 11 years ago? 154 naira. What is it today? 1,400. Tenfold, right? So you ask yourself, what was the minimum wage 11 years ago? 18,000 naira. 18,000 naira, you can't even buy half a bag of rice.
Right.
No, not right now. So you ask yourself.
We know some data packages cost more than 18,000 naira per month.
Well, now, but you see, the bag of rice is 8% of the basket. Telecoms was something much lower. But what it tells you is that if you ask yourself and that you went back to 11 years ago, right? And and look at those prices and see there's an industry where there's been no price review in 11 years. What do you expect to happen? That industry has become relatively unattractive, and the total revenues that was generated by this industry in dollar terms was as high as $6-7 billion 11 years ago. Now it's down to less than half of it. It's down to $3 billion. Investments, there's been reduction in investments. So what has happened? The quality of service, the drop calls, right? The effective linkages between this sector and the rest of the economy is beginning to unravel. So if nothing happens, if you stay where you are, if you remain static on this whole pricing mechanism, you'll find that this economy is heading downwards, right? It's just going to freeze. So what are we saying here? We're saying it's time to actually look at this pricing formula. Two things are important. One, reflect current trend of things, because you cannot keep the pricing of any commodity or any service static for 11 years. Two, deregulate it completely so that nobody tells what the price of cement will be. Nobody tells what the price of sugar is. Nobody tells what the price of milk is. So why should anybody be controlling the price of a service? It's the cost of that service plus the margin, and then.
And it seems like this tariff issue, seems to be everywhere.
Yes,
at this point, from the electricity, industry, and looking at this, decision to, float the naira at this time. Definitely, we've seen how that's impacted companies, in 2023. Yes. Looking at all those FX losses, which is also seeping into, the first quarter of 2024. But I think we've seen some kind of relative stability, with the naira in the first quarter. Somehow,
it has appreciated,
right,
compared to the extreme position of 1900.
We're still seeing FX losses in the first quarter.
Yes, no, but you see, these losses, last quarter. In fourth quarter of 2023, the official rate was 970, right? So the results you saw for Q4 were reflecting the exchange rate of 970. Between that time and now, the exchange rate has gone in different directions. Now it's about 1,300. So if you still have another set of losses to take, right? So having said that, what are companies doing? Companies are actually trying to recapitalize to make up for the losses they have made, and to make them compete, because if you do not invest in any sector, if you do not invest in a company, right, that company is bound to virtually go into oblivion, and that's what we can't afford. Right?
So, looking at this decision to float the naira at this point, let's count the costs at this time. We've seen how it's impacted, these companies.
Yes.
Was this the right decision?
It was the right decision, because currencies everywhere float, right? And the reality is that you build that in to your model. And if you don't want to suffer from the volatility of an exchange rate, you buy hedges. There are people who do nothing else but sell hedges, right? So you hedge your currency. You can hedge as far forward as you want. So even for your sales, right, your raw material costs and all of that, you can hedge. You buy the hedge. That's why you have a futures market. All right, and that's why people take that positions. So the speculators are the ones that go unhedged and all of that, but that's a different ballgame. But I listened to what the question of custom duty, whether you can fix it. You cannot fix an exchange rate for the custom duty. What you can do is to take an average for the entire month and say this is the average, and the central bank can say the average for this month is that. But to fix it is the beginning of going back to fixed and regulated exchange rates. Markets, by nature, the free market system and the price mechanism allocates resources efficiently. So let's not deceive ourselves.
And we know that these companies, these telecom companies, they did pay, bumper taxes.
Absolutely.
Right.
No, not only that, dividends.
And dividends too.
The truth is that the dividends they paid and the taxes they paid, right, put together, right, it's about 1.6 trillion naira. In the past, that was equivalent to about 3 to 4 months FAC. So to that extent, what it means that if MTN, Glo, and Airtel declare losses and do not pay taxes, the amount of money available to the federal government and state government, right, to allocate to all arms of government could be reduced by as much as 20% or 30%. That is a significant. So what's more, if this sector, right, you call it contributes about 10% to GDP. But if you bring the system down, if Glo, Airtel, and MTN were to shut down their network today, can you imagine what will happen to the entire economy? Of course, no payments, no POS system, no airline booking system, no telemedicine things. The entire economy.
We know there's no cash right now.
Absolutely. So the linkages, what is more important to understand is that the linkage effect, the pull and push effect of a sector that is so critical, right, cannot be allowed to go into decline and into decay, because it pulls along so many sectors that depend on it. Can you imagine if the systems were down and you cannot make any of your bookings, and all the airlines, you cannot make any payments, you cannot settle your NIPS transfers with trillions of naira? No, so it's a no-brainer.
We have people that rely on the social media.
Absolutely. So what do we call this? We call, there's what we call essential commodities, which are physical commodities, there's what we call essential services, but we call this critical services. Because without it, it's a problem. Nobody can leave home today without his device. You can leave home without your wallet, you can leave home without your card, but without your device, you are grounded. So what are we saying here? We're saying that this sector cannot be allowed to go into disinvestment and disinvestment into complete disaster.
With these losses we're seeing, with these results at this time, definitely this will impact corporate tax revenue.
Absolutely. That is the point. And without, you have a revenue problem, you have a growth problem. The revenue problem will get compounded. Of course, because of disinvestment, the growth problem. So when you have revenue in decline, growth in negative territory, the economy itself is on the ropes. Right. So the sector is not only is the sector on the ropes, the economy itself is dangling. And so what do? There's no point just crying about it. You've got to do something about it. Some people will say, okay, why now? You are increasing the price of petrol, increasing the price of this. How much more can the consumer take? Well, let's ask ourselves a question. 18,000 was the minimum wage. What are the workers asking for now? They're asking for 600,000. So if 11 years ago the tariff was X, you index it to the wage request and see how much it will be. But that's not what they're asking for. They're asking for the fact that, one, let it reflect the current level of earnings and cost of doing business. Two, let us do it so that we can invest in this sector, because if this sector, if there's no investment and reinvestment in the sector, it could spell doom for this economy, especially now that we have the hybrid work, we have the services, we have fintech, we have so much. And even the markets, the foreign exchange market, for example, the fact that it is your information, your device that tells you how much the exchange rate is in Onisha, in Ikeja, anywhere in the world, means that if this sector goes into disrepair, then it means that the currency itself will weaken because there'll be multiple rates and you will not know what it is. So this sector is important for price discovery, for efficient markets, pure markets, which actually leads to greater competition and greater growth.
So I guess the tariff increase is the silver bullet.
Well, let me put it this way. A tariff increase solves the immediate problem, but you've got to deregulate that sector so that they can price themselves accordingly. What the regulators and policymakers come in to intervene that there's no price gouging because you have the Consumer Protection Agency and all of that. So you don't want to have that, because if you have an oligopoly where there are few players, right, they can exploit the masses. However, because of the intensity of rivalry, because of the fierceness of competition, this sector has found everybody. When they're porting, Saka, and all these kind of things, everybody now knows that they had to undercut themselves to a point where the consumer benefited significantly. But now the consumer needs to be assured of quality of service. The quality of service will only come if there is new investment and reinvestment in that sector. That is not going to happen as long as the price levels and the current tariffs do not cover their costs.
Right, it was quite interesting. I saw some data recently that in Qatar, I think they have the fastest internet at this time right there. And I saw the companies that provide these services. I saw the likes of Etisalat and Zain. And these are companies that have passed through Nigeria, and they're delivering good service in other climes. So I'm wondering, what does it say about doing business in Nigeria? Is it the same old?
No, there are many factors.
High cost of doing business here? Or?
There's high cost of doing business. There's multiple taxes. You see, these devices are power intensive, so you need to do a whole lot of things, and you can't hold one thing constant and the others moving. So what we call general dynamic equilibrium. You're searching for that equilibrium point. That's what we're doing in the currency. It went up to 1,900, came down to 1,000. It's finding what we call the fair value. Those prices must not misaligned from the equilibrium values. So when you have that economy people can now sit back and say, okay, I'll invest there. There are 200 million people in this market. Their average income, is X. And what is more important than anything else is the average revenue per user. The average revenue per user was as high as $50 for way back, even when our GDP wasn't on this size. Today, the average revenue per user has dropped significantly to something like almost $9 or $10. That tells you that, one, there are maybe, God knows, maybe 150 million subscribers or something like that, but that the people are spending less because the pricing is not reflective of the cost structure.
And looking at the numbers for MTN at this time, we did is obviously the headlines all about the FX loss. But talk to me about the bright spots. Those numbers.
The bright spots are what I call the intrinsic value of MTN, the economic value add, is far in excess of what the financial values show. So these 2 quarters that we've had a challenge here is reflective of cumulative challenges that they faced. But once you adjust the pricing mechanism, that company and Airtel is it's not an MTN thing, it is a sector issue. It comes back again and begins to do that. But don't forget, there was a 500% return on investment way back as far back as 2004, 2005, right? And billions of dollars are being invested in this economy, and now you are beginning to get a negative return on investment. There must be a bright spot that you continue to invest, and so that what Orange or AT&T is doing in the US is what MTN and Airtel begins to do here, and becomes the catalyst for growth, right, because of a strong linkage effect and the fact that the environment, right, begins to better. And one thing must note, because they are quoted on the exchange, they've actually democratized the ownership. It's not concentrated in a few hands. And so everybody, for the first time in over 12 to 14 years, 0 dividend. You can imagine all those hundreds of thousands of shareholders that were expecting their check.
Right, that would be quite disappointing.
And if nothing is done, they will get 0 check again next year. So something has to be done now.
All right, we'll keep tracking that industry. Thank you so much, Mr. Bismarck Rewane, CEO of Financial Derivatives Company. So much to unpack there. We'll keep tracking that sector. Thank you so much.
Thank you for having me. Thank you.
All right, we'll take a quick moment now.